Hello everyone, welcome to the channel. Yesterday our discussion was very simple. What we told is market has formed a dodgy candle in days perspective. If we want the market to go up, then market has to break the high and open somewhere close to the high so that it can easily break it. This is what we discussed. And on the downward direction, what we discussed is if the market opens somewhere close to the lower range and breaks the low, then very easily we can see the downward target of 23,000 easily met. On the upward direction, we told like market can easily rally up at least till 23,800 because there is a gap here, and if the rally continues then it can go up all the way till 24,000. This is what we discussed because 24,000 is a psychological round number. What happened in the market today? Let's just do a small replay and understand how we could have planned our trades and how we should have executed our trades. So we have this high of yesterday being available here, right? So if I just take a line here and draw this line here, we need to wait to see a closure. Market opened gap up as per our expectation, and whenever the market opens gap up, we always have a rule that the last candle will act as your demand, right? So let's wait and see if the high was closed first. So if I allow the market to play, we can clearly see that the market was struggling to break the high of yesterday. So market did not get enough strength to break the high. So where will the strength come from? The strength will eventually come from a demand. So where is the demand setting is somewhere as part of our yesterday's closing. So we will not immediately take trades whenever market comes to a demand. We wanted to see a break of structure. So if I draw you the structure out here, this is a low, this is the high, market came down, market did a pullback, and market came down again. Now what I wanted to see is a closure above this level, so then a small pullback I can target at least till 100 or 200 points in this is what was my thought process during the market hours. So allowing the market to play a little bit forward, we can see that, one second, this candle gave you a closure, right? So the moment we got this closure, what we have to do is when we are in 5 minutes time frame, always switch to a little bit lower time frame, at least 2 minutes or 1 minute time frame. In 2 minutes time frame, we can clearly see there is a last indecision candle before this break. Which candle broke it? This was the candle which broke the structure. What is the indecision candle here? This is an indecision candle here. So if we get the market in a small pullback back to here, we can easily plan a long position, keeping the low of this candle as a stop loss and target 1:3, 1:4, or what we discussed is 23,800 as a target, right? So if I stretch all the way till 23,800, right, this position is quite big. The reason why I'm saying this position is quite big is market is coming from 23,400. The place where we are is at 23,550. Already 150 points has been moved, right? So the maximum we can expect the market to move from this position should be close to 100 points. If you take from the high, it is 23,600 ish range. So 23,700 would be an ideal target. According to me, that should be your eventual target which you should set. If the market goes past this, then we can start trailing candle to candle. This is what my thought process was during the market hours. So if you see this was a pretty big rally which happened, and 23,700 is a place where I saw a rejection candle and I closed the trade. And whatever happens after this, right, it does not matter because market can go sideways, upward movement, downward movement. It does not matter. We should have a plan. We should stick to the plan, and we should make sure that the your stop loss, your entry, and your target is being defined before even you enter a trade. If you don't have this kind of a plan, what will happen here? If you even entered call here, this kind of a decay would have made you loss. If you entered put here, this kind of a small upward movements would still make you loss. This is why we always have to plan to enter from a demand. Don't enter any trades blindly. That would be my ultimate suggestion. Okay, so I'll just delete whatever we have here and I'll move to a little bit higher time frame. Let's go to 4 hours time frame and see what happened in the market right now after today's move. So from 4 hours perspective, we still are in bearish. Okay, so if I draw you the Fibonacci extension from this swing point to this swing point low, what we can see is this area 0.71 to 0.88. This is a golden zone. This is what they call in Fibonacci as a golden zone, meaning whenever market falls, it will retrace back to 0.71 percentage and then will start to fall again. So what we can easily see from this Fibonacci levels itself, 24,138 will be an ideal upward target, and 24,350 will be an ideal second target if the market continues to rally. Okay, so this is very clear. So we use this only for determining where the likelihood of the market can reverse from, or where we can ideally take the targets from. So I'll just draw a small box here because there is a small gap also. This aligns with everything what we are discussing right now. So watch this video once or twice. Please do watch yesterday's video also again. That will give you a confidence on how you can plan your trades better, how you can execute your trades better. So plan for tomorrow is going to be very simple. So we have from 1 hour time frame, if I go back, yeah, right. So we have that this high was broken, but there was not a strong closure which was obtained. If you see here, if I just draw you a line here, this high was broken, but there was no strong closures obtained. It all depends on where the market is going to open tomorrow. And also we see that there is a indecision candle or a demand which is sitting here. Okay, so again, if I draw you the Fibonacci here from this particular low point to this particular high point, we see that the golden zone is sitting somewhere here, the same level what we are marking. So ideally, if market retraces back to here, something like this, and gives a small positive reaction in a smaller time frame, we can see a rally again on the upward direction. This is going to be the first ideal trade for tomorrow. And second ideal trade, what we can see is if market opens somewhere gap up. Okay, it all depends on where the market opens. If market opens above this level, 24,800 level to be more precise, if market opens somewhere here and starts to break this gap whichever we have and sustains above this gap, wait till 10 o'clock and see what the price action is. If the market is trading above the opening price, then we can see a very big rally all the way till 24,000. Keep your targets booked at 24,000 for tomorrow, because there is a swing point available at 24,000. This swing point is what I'm saying. There is a swing point available here. There is also a gap till 24,090. But eventually, once 24,000 is hit, make sure that you're trailing your stop loss all the way till here, candle to candle. Okay, don't wait for a very big targets like 24,200, 300 and all. Make sure that in your intraday you capture 100 to 120 points on a daily basis. That is more than enough. What about downward direction? See, downward direction is not ideal because of the momentum of these candles which is being printed now. The only downward momentum, meaning only place where downward direction is being possible, is if this particular demand is broken with a closure, or if the market opens pretty big gap down below this demand level. Then on small pullbacks, then we can see a target, like as we discussed yesterday, we can see a rally to the downward direction. This I'm not interested much, because I'm more interested on these gaps to be filled for tomorrow or day after tomorrow or in the coming days, because there is a gap here, right? There is a gap here. These gaps is where sellers are more likely to create positions to trap you. If market rallies up pretty big, what sellers will think like, I don't want to sell market from this position. Rather, I want a lot of people to buy the market all the way till here and then initiate a selling position from here. This is what sellers will think. So it is better that we move along with this, but don't carry forward any positions for tomorrow or day after tomorrow or Monday, Tuesday, whatever the case may be. Don't carry forward any positions. Plan your intraday trades in such a way that your risk is being properly managed whenever you are entering into any kind of trade. Thank you so much for watching. We'll meet in the next educational video.